big story this evening is how U.S. markets have responded. Dow Jones plunged over 900 points at markets open as fears over the spread of coronavirus gripped markets across the globe. The S&P 500 also registered its biggest drop since August at open. Meanwhile, back home, Indian equity investors lost about 3 lakh crore rupees of wealth just wiped out. India VIX surged nearly 26% with BSE closing 2% lower at 40,363. Nifty dropping over 2% to end at 11,829. Now, the outbreak has spread to South Korea, with the country being on high alert. There are reports of more infections coming in from Iran. There have been some confirmations in Italy. In fact, it reported its seventh death and saw a rise of cases to above 150 from just 3 days before Friday. So there's a lot of this news coming over the weekend that has spooked markets. But let's talk about what's happening right now and the next couple of days, how they're looking for global markets and for India. I'm joined now by Peter Cardillo, Chief Market Economist at Spartan Capital. Peter, thank you so much for speaking with us today. Just take us through what's happening in the US markets right now. Where is the fear coming from? Because the coronavirus news has been around for a while. You and I have spoken before. There was a hope things would sort of settle down. Where does this fear come from?
Well, I think it's the fact that, that the virus is spreading outside of Asia. And that is basically what's causing this fear factor, which now is, having a very negative impact on the markets, at least for the moment. And unless, we see some positive news coming out of non-Asian countries, then I think that this fear is going to continue. In fact, the World Health Organization gave a press conference about a half hour ago, and they said that the numbers in China infected, that is the amount of infected people, had actually gone down. So the fear is stemming over what's happening in Italy and in Iran, and that's really what's causing this. But from a technical perspective, the market, has violated some support levels, at least on the S&P 500, around that 3,300 level. So unless we can close above that level, I think that this selling can continue, and it probably can be labeled as a technical correction in a bull market.
Okay, just give me your sense, Peter, on how you see commodities responding. Of course, we've seen the coronavirus impact on commodities as well. Gold, running up, crude, etc. Do you see that trend continuing?
Yes, I do. Gold was it's up $28 as we speak. Earlier in the session, it was up almost $40, and there's a rush to buy gold, and we believe that gold is likely to reach 2,000 by year end, and so I think there's a way to go, and that's not only because of the coronavirus, but other factors, other geopolitical factors, and just the fact that the markets are strong across the globe, and I think people are going to continue to seek some sort of hedges, and the best place that you can hedge is in gold. And look what's happening in the bond market, the government bond market. The 30-year registered a new record low. We have the 10-year, which is down under 140 at 137.70. So there's a rush to the safe havens, and I think that will continue, even in spite of the fact that you might not have a steep correction, although it's rather difficult to say how far down the market can continue to decline. I would have to say that if a technical correction is confirmed, we could probably be seeing a correction of 7 to 8% from last week's last week highs.
Peter, I want to get your sense on how you're seeing this pan out in Indian markets. Indian markets have been fairly immune to the coronavirus fear over the last 1 week or so. But of course, they're reacting to how global markets are, and we saw that pain today. Do you see that trajectory over the next couple of days?
Well, it's difficult to really say how the impact is going to be from a macroeconomic viewpoint. It's going to take maybe another couple of weeks before we see the impact hitting the macro news. And of course, the key is what's happening in China. And the markets are somewhat skeptical because sometimes those numbers may not be valid. And so until we see what's happening within the Eurozone, what's happening here in the States, what's happening in other parts of the world, it's going to be, I think, a factor for this market, a negative factor. And as I said, turning back to the technical aspect of the market, it's a little early in the ball game to say, well, we're headed down 7 or 8%. But if these numbers don't improve, then I think we're in for a fairly substantial technical correction, which doesn't necessarily mean it breaks the back of the bull market. No, I'm not suggesting that one bit.
Okay, a lot of wait and watch sort of situation developing here, but thank you, Peter Cardillo, for dialing in and giving us your thoughts.
My pleasure.